Right, in both those two cases, you did see how, there are being big questions that are raised over the entire IBC process, and we understand that the government is working on certain amendments regarding the same as to how they can ensure that the IBC process becomes more smooth. But in the run-up to that, we also get you a big 18-hour exclusive where we're understanding that the SEBI board that is now going to meet on March 28th is likely to discuss some of those amendments to the Insolvency and Bankruptcy Code, and the market regulator is also likely to call for a public consultation before they finalize some of those crucial amendments. Nentara Rai is getting in all those details. Nentara, what's on the agenda, and what kind of changes can we expect to the IBC process?
Well, IBC certainly the flavor of the season. A lot of big accounts, bids are coming in, and should not come as a surprise. The market regulators also taking up the IBC, but because it's so sensitive, I am being told that it will be thrown open to public comments, simply since these amendments will have a far-reaching impact. So let me take you through some of the important ones. First up, this is the most important one, the market regulator likely to seek public comments on whether there should be any trading restrictions on all of those companies that go under insolvency and bankruptcy. You've had industrialists, for example, like Sudden Jindal, being quite vociferous that a lot of these stocks are penny stocks. Any wild swings actually impact valuations, and therefore they should be barred from trading. On the other hand, market participants argue that you need a strong secondary market, that the stock markets are important at finding the transparent, through a transparent process, the correct price discovery. So they are in favor of these stocks continuing to trade, and they believe it's in the interest of minority shareholders as well. So that's something very important to watch out for. However, what seems to be unanimous in verdict across the board is that you need some kind of restrictions to rein in volatility, to make sure there is no price rigging, that promoters are not able to increase their stake by routing money, etc. So that's one big amendment that's on its way likely. The second one has to do with the minimum public shareholding norm. It has to be 25%, but SEBI of the view that in case a new promoter is coming on board and needs to infuse capital to turn around the company and therefore breach the minimum public shareholding norm, that should be allowed. Such an exemption should exist. So that's one relaxation, and then such promoters would be given more time to adhere to the 25% norm. So right now it's 1 year. For IC, it could be increased to 2 years. Delisting, that's the third bucket. Now right now when you delist a stock, you follow a very stringent process of a reverse book building process. SEBI might just exempt that and leave it to the insolvency resolution professional and the NCLT to arrive at the delisting price. That's something the minority shareholders may not be happy about, so public comments will again be sought. Besides that, a lot of new disclosures might be put in place. The market regulators anyway been trying to do that across the board. IBC doesn't seem to be an exception. So for example, the number of bids received, the details of the resolution plan, etc. And even before the IBC is invoked and a case is admitted in the NCLT, SEBI is likely to ask for public opinion on whether the demand notice and the copy of the invoice with the first default note with respect to should be put up on the stock exchanges. So stay tuned to ET now, the crucial board meeting on the 28th of March.